Good morning, everyone, and many thanks for joining us on Morning Markets from the team at True Potential. Today, I wanted to just reflect on asset market performance, and in particular the equity market performance that we've seen over the past 12 months to start before going into our usual commentary. And that's just because 23rd of March 2020 marked around the bottom for global equity markets, and the returns that we've seen subsequently to that have been very strong. And I just wanted to provide some context to that, because when we're in the nitty gritty of looking at it each 24-hour period of what's happened, it's easy to forget that bigger picture of returns that we've seen. So just looking at the five sort of regions that we normally discuss, looking at the UK, the main market there, largest 100 shares, what did we see? We saw a return of some 27% over that period. If we look at Europe and we look at the Euro Stoxx 50, we saw a return of about 45%. Moving further afield across the Atlantic, what did we see there? We saw returns of the S&P 500 of about 63%. And then looking at the more growth-orientated NASDAQ, return closer to 80%. Going out then to Asia and Asia Asia Pacific region, what did we see there? We saw a return of 66%. So very strong returns from equity markets over the past 12 months. And I think that gives us context really then to think about just what's happened through that period, but also just to think about how we think about returns going forward and just what's happening in equity markets at this point in time. And maybe just turning to our normal daily commentary and thinking there, what did we see in equity markets over the past 2 days? And we've seen, I think, just a bit of that ongoing concern, sentiment, looking at a number of things over this morning ahead of the video. It does look as if sentiment is being impacted again by COVID-19 and concerns around infection rates in a number of European countries, but also what's happening there in terms of extensions of lockdowns, the reimposition of restrictive measures, and that clearly will impact economic activity. And I'll come on and mention the commentary slightly later from Philip Lane, the ECB chief economist, who was alluding to some of these impacts yesterday in a speech that he was giving. I think also just looking at the past 24, 48 hours in markets, we've seen that bit of that rotation away from those areas that have done very well on that reopening theme that we've seen playing through in equity markets. And they have been underperforming relative to technology. So technology and large cap technology had a very good day yesterday, for example. Contrast that with the performance of the small and mid cap areas of the market. Not as evident in the UK and Europe, but very evident in the US, where we saw the Russell 2000 falling about 3.5% yesterday. I think the other thing just to touch on, and I've put a chart in today just to look at the oil price. Commodity markets were very much in focus all through the past 12 months, and we touched on a number of times on the dynamics in the oil market, thinking about how the oil price traded at a negative level. And we've subsequently seen a very strong recovery in the oil price as demand has gradually started to recover, but also the supply issues and how supply has been managed by OPEC and OPEC Plus. Just looking at the past couple of days, we've seen actually the oil price come off about 11.5%. You can see that in the chart that we've just got on the screen at the moment. So quite a drop over a period of 2 days. Really, that speaks back to the start of the conversation, concern on demand levels, travel restrictions, etc., and how that will impact the demand for oil going forward. So quite a material move there, and you can see that just in the chart on the screen. I think the other thing to comment on, and we mentioned this at the beginning of the week, thinking about the sovereign bond markets, the moves that we saw last week. I've touched on some of the stability that we've seen, and then yields gradually coming in a little bit over the course of the past couple of days. If we look at the US, we're back to a 10-year yielding 1.63. Look at the UK 10-year gilt, we're at about 0.75%. So moves of 5-6 basis points, and that's similar both across the curve, but also what we're seeing across other sovereign markets as well. So yields gradually coming back in a little bit. And that's probably understandable given the background of the rising COVID infection rates in a number of areas, and that just taking the market's focus back to the safer haven assets that's available. And just thinking about that in a little bit more, I think the other thing where we see that is the currency markets. We see the dollar being a little bit stronger over the past couple of sessions, and that's probably having a more of a noticeable impact in emerging markets, and in particular those emerging markets that have got commodity exposure. So if we think about the chart that we saw previously, that weakness in oil price feeding directly into those oil exporters such as Russia, for example, and we see that playing through in their currency markets. I think the other thing just then to think about, I touched on Philip Lane's comments in terms of the ECB, and just, yes, he was highlighting the issues that the EU could see in the second quarter, but he also was touching on quite an interesting point around the level of fiscal support, fiscal stimulus that's come through in Europe, and really, I think, challenging governments to say, is it sufficient, and particularly, is it sufficient when we compare it to what fiscal support has been provided in the US. So that significant fiscal impulse in the US as a percentage of GDP relative is quite materially larger than that of Europe. So maybe challenging governments, are they doing enough? Do they need to do more? Also just wanted to touch very briefly on UK inflation data that we've come out this morning. One of the things that you'll have heard us talking about over the past number of weeks is really this pull in markets about inflation expectations. We know that we'll see a pickup in inflation as we annualize over the next couple of months, and whether that's sort of a transitory effect or something that is more longer term. Just looking at the UK this morning, it really tells a very mixed picture in terms of the inflation backdrop, with core consumer price index increasing 0.1% month on month, and also 0.4% year on year. That's well below where sort of market expectations has been. The year on year figure had been penciled in at a sort of an increase of 0.8. So the inflation backdrop still pretty benign in the UK from a consumer perspective. We did see a bit of a pickup in producer prices, both on the input side, but also starting to feed through on the output side. So that's something to watch going forward. I'll leave it there for today. Please do subscribe on our YouTube channel and look out for our video again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.